The total cryptocurrency market cap has failed to break higher into price discovery. This lack of momentum, despite seemingly bullish headlines, should not be overlooked. I highlighted that in bold. So now we have not only new dates to pay attention to, which is next week, but we can also see key vocabulary that we know keeps sell pressure intraday on riskier assets like crypto. All right. As for XRP, taking a look at some price levels. So we're going to run through this briefly just so that way we can end the weekend on a positive note, get everybody's mindsets in the right headspace, and then take a look at the economic calendar for next week. All right. So in today's video breakdown, I just want to thoroughly go over and show you guys how here in this community we are, I don't like this sound like I'm tooting my own horn, but probably the most accurate retail community on the face of this internet. Why? Because we pay attention to institutional based insights, both fundamentals and technicals. So first, I'm going to cover the fundamental aspect, what we were talking about at the beginning of this week on Sunday, July 27th, which was the first trading day of this fresh week heading into August. We're going to look back at what we were saying. Then we're going to forward progress and take a look at fundamentals that are always catching up to us here at CYPRX. Take a look at the landscape, what happened in crypto. We're going to go in, take a look at the deltas, show you guys where prices are trading at, delta to delta. So not only in terms of fundamentals are we delivering accuracy to you guys this week, but also in terms of price analytics and technical analysis. Okay. So starting off with fundamentals. And so that way everybody's on the same page. We understand what were some driving market factors and what we were looking at the beginning of this week that could play a possible role in creating a risk off environment temporarily, creating a pullback induced environment in risk assets like crypto. So you can see charts never lie, neither do fundamentals and neither do deltas. We're always attempting to show you guys timestamps here so that you can see that there's no other community on the face of the internet that is telling you guys these things in advance to this accurate level of a degree. So the weekly high came in at $3.92 trillion. And you can see down here at the bottom of my charts where there's the time displayed. This was on Sunday, July 27th, 2025, when the market was operating at a high. I had slapped these areas of interest on my charts for you guys in a Zoom call that we hosted back then on Sunday. Those three areas of interest for a first pullback where we were going to, at least I was, again, not financial advice, going to implement capital into the market was 3.7 trillion. That area of interest was met. The second one was 3.6. That is yet to be met. And the third area of interest for dollar cost average levels is 3.2 trillion. Now, if we go back to our July 27th report, let's just take a look back at the beginning of the week and show you guys what we were discussing, especially if you're new in this community. And let's say, for example, this is your first Zoom call. So you can see why it's so important that you pay attention to these fundamental reports, because we called out this pullback to the T of a degree. You can see here's that area of interest, $3.7 trillion in the total cryptocurrency market cap via the screenshot that I was sharing with you guys as our first area of interest as to where the market could potentially pull back. And so reading this, I said to you all, this is again back from July 27th. So Sunday at the beginning of this week. Despite today's announcement of a principal trade agreement between the United States and the European Union, the total cryptocurrency market cap has failed to break higher into price discovery. This lack of momentum, despite seemingly bullish headlines, should not be overlooked. I highlighted that in bold. At the time of writing, the total cryptocurrency market cap is hovering around 3.91 trillion, the same level that we saw last week. We need to be careful in case momentum stalls out here. The market may need more than just diplomatic progress to drive another bullish leg. So let's see if we can break above this area, last week's highs, and retest creating it as support, or if this area is rejected, coupled with sentiment turning risk off. If supportive macroeconomic fundamentals do not follow through the rest of the week, while trade diplomacy is an important factor for global sentiment, markets are still heavily data-driven, and crypto remains tightly correlated to broader risk appetite. A trade deal alone is not sufficient to sustain a rally, especially when that deal has not been signed yet. And back on Sunday, we covered this in detail, the EU trade breakdown. If we continue to scroll down here, I said, so while worst case scenarios like a full-blown tariff war seem to have been temporarily avoided, this is more of a de-escalation rather than a resolution. Down here, I said, Because traders understand that the real drivers of sustained risk on sentiment lie in upcoming macroeconomic data and central bank policy direction, the July FOMC meeting is expected to be a placeholder with no policy changes, but Federal Reserve Chair Jerome Powell's tone will be closely scrutinized. Right now, the balance of risks remain unchanged from June. Inflation risks lean to the upside, while the labor market is still showing some signs of cooling. I said here in bold, any hawkish shift in Powell's rhetoric could spook markets, particularly if it weakens the current expectation of rate cuts later this year. Again, this is back from July 27th. The Fed's policy trajectory will become clear by September in the meeting, by which time it will have two more rounds of inflation, labor market data, and GDP data to analyze. However, the real wild card remains Powell's speech at the Jackson Hole Symposium expected on August 22nd. What to watch for this week? So, again, this is back from the beginning of the week, always letting you guys know in advance. Beyond the Fed, markets are also keeping an eye on upcoming speeches from Bank of Japan officials, inflation GDP prints, and labor market data. If any of these indicators push back on the rate cut narrative, or worse, suggest that central bank and the Fed may need to stay hawkish for longer, risk assets like crypto could face selling pressure. At present, prices are holding on to gains, but traders should exercise caution. If Powell leans hawkish, labor data shows no signs of cooling, inflation data surprises to the upside, or dollar strengthens due to tariffs or pushbacks on rate cuts, we could see profit taking in risk assets as safe haven demand increases, which could lead to potential pullbacks heading into early August. And again, this is when we are trading at highs, keeping in mind that at this time, if you go back and you look at the retail rhetoric, everybody was screaming, oh my gosh, we're about to go into new all-time highs, XRP, $15. You guys saw the rhetoric in July, right? There were so many influencers with high-end follower accounts that were screaming $15, $20 XRP by end of July. Oh my gosh, bull runs here, da 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 da. Yet here in this community, we were telling you guys, no, no, no. Caution is warranted. We noticed because of the deltas that we had that buy momentum at these highs was stalling and that sellers were starting to show their hand. And there were even chats in the Bank of Kevin chat between Scalper, T Flower, and Kevin, where they specifically had discussed and talked about how sellers were starting to show their hand, albeit buyers' higher time frame are still in control. We're starting to see some profit taking and sellers starting to again display some strength, right? And this just coexisted with what I was telling you guys at the beginning of the week, that if we saw these fundamental drivers create a risk-off environment, it was most likely going to lead to a pullback. Let's continue. This is a July 29th report. So let's just look at some highlights from this. As of writing, the total cryptocurrency market cap continues to show no sign of aggressive selling. However, buyers still remain in control on higher timeframes, despite some mild pullbacks. Sellers have not yet gained the upper hand, but caution is still warranted in the days ahead, as several key macroeconomic factors and geopolitical developments could continue to weigh on risk assets. And we talked about here, this is again 2 days later on July 29th, strengthening in the US dollar is one of the primary headwinds weighing on risk assets, right? Then down here, we mentioned investors' focus is now turning to Wednesday's Federal Reserve policy decision, followed by Fed Chair Jerome Powell's press conference. While the Fed is widely expected to keep interest rates on hold, keeping in mind, right, we had all these influencers on the internet saying, oh my gosh, we're going to see a surprise rate cut, da da da, market's going to go flip bullish. No, we're giving you guys realistic expectations, keeping you guys level headed in this community. We shifted our focus to what Jerome Powell was going to say, where I said here, market participants will be watching closely for Powell's tone, any change in guidance around inflation, the labor market, and potential rate cuts later this year. A hawkish or cautious message, especially if Powell pushes back on rate cut expectations, could drive further dollar strength and lead to further profit taking across risk assets, right? So this is just now day 2 where I continue to reiterate that we are most likely going to see some profit taking under these conditions. So sure enough, right, we saw some significant dollar strength in a Zoom call that we hosted. I believe it was July 25th, if I'm not mistaken, off the top of my head. We had talked about this area of interest, the 100.00 level on the dollar being reached. That was when dollar was trading at 97.7 as our first area of interest for dollar strength before we started to see some sell pressure. You can see that reflected in dollar's price today. And because of dollar strength, we mentioned that that would most likely be a key catalyst leading to some profit taking and riskier assets like crypto. Well, now if we fast forward to recent times, i.e. today, keeping in mind all the fundamentals that we gave you guys days in advance were here specifically we mentioned. Caution is warranted if we see a hawkish POW. We see labor market data showing no signs of cooling, inflation data surprising to the upside, dollar strengthening due to tariffs, pushback on rate cuts. We would see some profit taking and risk assets and safe haven demand increasing. Well, now let's look at the retail fundamentals that have always caught up to us here at CYPRX because we do this forward guidance. Check this out. In the CYPRX fundamental section, you can see right here, I always try to give you guys updates. Look at this. It says, the Fed's decision stands pat. The market took away a hawkish message. US rates rose, the dollar rallied, and stocks were sold, right? So you can see right here exactly what we were talking about would weigh on risk assets, i.e., stocks and crypto, is exactly now what has taken place, right? This is a report. You can see the link right up here that I dropped for you guys. This is a report from just yesterday. So days after we had anticipated that this would be one of the key contributing factors to temporary risk asset weakness. We come over here. This is another report. Look at the date, July 30th. So again, days after our reports, it says stocks relinquished their gains after Fed Chair Jerome Powell pushed back against imminent rate cuts. Literally word for word, what did we say? Right? If we see a pushback on rate cuts, it would lead to a possible pullback heading into early August, right? This is a report days after, citing inflation risks from rising tariffs. Again, word for word, what we were saying in this report. If we come over here, this is a report from Trading Economics today, August 1st, 2025. The US dollar index hovered near 100 on Friday. There's that key level that we had anticipated days in advance on a Zoom call that we hosted for you guys. On Friday, holding at a 2-month high after President Donald Trump reaffirmed a 10% baseline global tariff and imposed reciprocal duties of up to 41% on countries with trade agreements. So we saw dollar strength due to tariff implications. And again, days in advance, almost a week in advance, this is exactly what we mentioned. Dollar strength due to tariffs, right? Now we're seeing that reflected in real time, or at least we did later this week. Trump also announced a 40% tariff on goods deemed to have been, this is a weird word, transshipped to circumvent existing duties, heighten trade tensions, and fueling demand for the greenback as a safe haven. Investors also turned cautious ahead of the July jobs report, which was expected to offer fresh signals on the strength of the labor market and the Fed's next policy move. On Thursday, data showed core PCE prices, the Fed's preferred inflation measure, rose in June and 2.8% from a year earlier, muddying prospects for a rate cut in September. The dollar remained firm against major peers, hitting a 4-month high versus the yen. So you can see here it mentions rising prices and inflation. And this is again a report from today, August 1st. Back on July 27th, again, we were talking about this, right? We said if inflation data surprises to the upside, it could again lead to that potential pullback heading into early August. All right. So I'm just trying to show you guys everything that we talked about and laid out on the table days in advance has now materialized and come into fruition. So there should be nobody that's reading these reports and has stayed up to date with the fundamentals that's confused on why we just saw the market pull back to $3.7 trillion, which was our first area of interest for dollar cost average levels. So you can see now how powerful all of this is, because imagine all the retail investors that were like, oh my gosh, I'm going to miss out. They're FOMOing. They're seeing the market green up 30 billion, 50 billion, 100 billion, and they're buying into this hype because of uneducated, misinformed retail investors that are making content on the internet. And now all of their positions are at a loss because they don't know when to dollar cost average in properly. However, here in this community, if you guys paid attention to our areas of interest, albeit we are at a loss as well if you dollar cost average in the other day when our areas of interest were met, but not as much as other retail investors. And that is our goal here. Our goal is to have the upper hand to minimize the downside risk in our portfolio and maximize the upside return by understanding when it's properly timed to dollar cost average in or trade or set ranges in DeFi positions by using these fundamentals and these delta zones. So real fast, just taking a look at the deltas because all three majors traded from delta to delta, right? So you can see XRP. I have not deleted one of my circles from previous Zoom calls. We were highlighting the $2.94 region as our first bearish area of interest if we cannot break above $3.27 in a previous Zoom call. And we literally traded from delta to delta. No overhype, no overextension, price predictions, none of that stuff. Literally just trading from delta to delta. The weekly high came in at $3.27. The weekly low has now come in at the next delta at $2.94. You cannot disclose, like, this is insane accuracy. And it's not just on XRP. Let's go look at ETH for ETH people in this community, right? Delta to delta. Nuts, right? 3882 to 3594 to the freaking T. Like, you can't even make this stuff up. Crazy. And we had these levels, 3594, well in advance. We had covered them in previous Zoom calls. Same thing with Bitcoin. As a matter of fact, look at that. Here's one of my circles from a previous Zoom call. I haven't deleted it. That's exactly where price action came into, trading from delta to delta. We were trading up at the highs at the 120,657. We had mentioned in previous calls, if we cannot break substantially with bullish momentum above that, retest it as support under a risk on market sentiment, then the most likely scenario was we were going to come back to the bottom of this range. I remember highlighting it for you guys. I said here, Bitcoin retested this level, buyers defended multiple times. And that was when I created this circle for you guys. And I said, we're most likely going to come back into the 115,467 level. And again, to the T, deltas never lie. Price came straight back into that level. And now we're slightly starting to see buyers defend. The question is, over the weekend, can we continue to see buyers defend and hold these price levels, creating support, starting to see a risk on market sentiment as we head into next week, right? So that's where we're currently at. So with the environment painted today, we saw some profit taking in the dollar. Dollar pulled back from the highs that we had anticipated at the 100 psychological level. Dollar showing some weakness. This is because we saw a misprint of the NFP. NFP actually came out cooler than what the market was expecting. Coupled with, does anybody else know anything else that happened today that supports further rate cuts from the Federal Reserve? There was two things that happened today outside of NFP. Actually, collectively speaking, one, but outside of the NFP figures today, we had two Fed speakers. Remember, we had mentioned in previous reports to be monitoring what the Fed speakers say after the NFP. And so here we can see two statements from multiple Fed speakers, both from the statement by Chair Vice of Supervision, Michelle Bowman, and a statement by Governor Christopher Waller. And both of them supported rate cuts. You can see here it says, at the most recent Federal Reserve Open Market Committee, I dissented because I concluded that cutting the policy rate by 25 basis points was the appropriate stance of policy. In a speech I gave on July 17th, I laid out a case for cutting the policy rate at the July FOMC meeting, and my views have not changed since then. This is a dovish comment. This weighs on the strength of the dollar and supports the likelihood of rate cuts at the next Fed meeting. I will recap the reasons for doing so. First, he believes tariffs are a one-off increase in the price level and do not cause inflation beyond a temporary increase. That is a super dovish remark, right? Because this past week, what did we see? We saw higher core PCE prices, but Fed Christopher Waller believes that those higher prices are temporary. So that was a dovish statement today from one Fed speaker. Then over here, you can see another statement from another Fed speaker. I dissented from the Federal Open Market Committee's FOMC decision to maintain the target range for the federal funds rate at this current level. As the committee's post-meeting statement notes, I prefer to lower the target range for the federal funds rate by 25 basis points. One, inflation has moved considerably closer to our target after excluding temporary effects from tariffs. So again, we have another Fed speaker mentioning that she believes these effects on tariffs are temporary and that the labor market remains near full employment with economic growth slowing this year and signs of a less dynamic labor market. I saw it is appropriate to begin gradually moving our moderately restrictive monetary policy. So you have two Fed speakers supporting the likelihood of Fed rate cuts later this year, which we know tends to weaken the strength of the dollar or demand for the dollar and increase, usually historically speaking, the strength in risk assets. Now, we're not seeing any substantial buyers defending or aggressively, entering into positions here at these discounts, albeit they are slightly defending. And that is because we're still seeing other uncertainties linger. For example, there is a lot of trade uncertainty right now lingering in the market, considering that Trump just announced all of these new tariffs. You can even see it in the headlines. Trump injects new doses of uncertainty and tariffs as he pushes the start date back to August 7th. So now we have not only new dates to pay attention to, which is next week, but we can also see key vocabulary that we know keeps sell pressure intraday on riskier assets like crypto. Without even reading the entirety of this report, you can just pay attention to key vocab here and understand that we're probably not going to see any aggressive buying with headline news events that, again, create fundamental drivers in these markets that the algorithms have to shift to. We can see these words. We know that there's not going to be any aggressive buying until these words pretty much are removed from headline uncertainty, right? So, as I mentioned, I deployed some capital at $3.7 trillion dollars, spread out into a basket of different altcoins, but I'm saving more capital on the sidelines to DCA more aggressively in case in the coming weeks, dollar continues to strengthen and we get a further decline in prices. For the remainder of the session, I remain attentive to consumer sentiment, inflation expectations, and PMI figures. So, why am I saving capital on the sidelines? Because what I'm seeing is that we are seeing higher tariffs announced. So, for example, you can see in this report, what I'll drop in the fundamental section, it's a whole entire breakdown of the recent tariffs and everything that's been taking place. And so, even the Fed speakers are starting to say that inflation might tick to the upside, albeit it might be temporary. However, what this will likely do is keep the Fed on hold for a prolonged period of time, and it will likely lead to further strengthening in the dollar. That is the sentiment right now. So I'm still remaining cautious, albeit I'm still bullish on the higher time frame, right? I still think that after this pullback, we're going to find some support at one of these three levels before tracking higher or starting to rekindle losses. But for now, I'm keeping capital on the sidelines as I recently deployed at 3.72 trillion. Maybe next week we see buyers make an attempt to try to rekindle some of those losses. But if we don't see a continued sustainable risk on market sentiment and we do see higher inflation, we do see continued strength in the economic docket from the United States, then it's most likely going to continue to lead to dollar strength, and we're likely going to continue to see sell pressure on risk assets. So my next area of interest, if that projection does come into fruition where I will aggressively deploy some capital, is at this next area of support. And that comes at about $3.6 trillion, dollars, where again, the market could possibly find some support. Buyers could defend from previous prices, and we could start to see a reaccumulation of orders and a market recovery. And on the higher time frame, this will just look like a pullback. Temporarily, it'll be painful. People will say, oh my gosh, we're about to enter into a bear market cycle. They don't understand that we're in a headline driven environment. And the underlying fundamentals in crypto are still excessively bullish. It's just that right now, we're in an environment where investors have recently favored safe haven assets, right? So, with that in mind, I still firmly believe that we are in an environment where that could continue to unfold until proven otherwise. However, I'm not marrying that bias. I'm not marrying the bias that the market could continue to sell off and we could continue to see some sell pressure and risk assets leading us down to these lower prices. I'm being reactive. I'm playing both offense and defense. All right. So, with that being said, the current environment still remains temporarily risk off as we still are seeing some lingering uncertainties around tariffs. And if those tariffs continue to feed into the uncertain narrative, then it's most likely going to continue to feed into safe haven demand and keep pressure on risk assets. Inversely, if we see any positive announcements over the weekend, for example, trade negotiations that favor both jurisdictions and leadership from, let's say, Canada or the United States or Mexico and the United States or any major jurisdiction where we're waiting for further headline announcements on the tariff front, high-fiving each other, and the market perceives that as optimistic, then we could see the market turn around, right? So I'm not sitting here saying that the market is going to sell off, but again, we need to understand the current landscape is temporarily uncertain. And so over the weekend, there's obviously, of course, no scheduled data. And so that means that geopolitical tensions and tariff headlines are going to be our primary focus up until next week, Monday. So taking a look at the calendar real fast, what do we have on the horizon next week to be mindful of? Let's go in and look at the first full week of August, Monday the 4th through Friday the 8th, right? Actually, not that much, right? So the calendar week next week, let's turn on the yellow folder real fast. We have PMI figures, that's going to play an important role. That's not until Tuesday. We have multiple FOMC speakers. So next week, we have our primaries are going to be Fed speakers, PMI figures on Tuesday for strengthening or weakening in the United States economy. And then we have on Thursday unemployment claims to pay attention to, which is going to give us more insights into the strength or weakening in the labor market. Outside of that, remember that the next deadline date for these tariff updates is going to be on Thursday, August 7th, as we read in that one report. So our primaries next week are going to be tariff headlines. Do we see positive negotiations or negotiations continue to stall or sour negotiations between major jurisdictions, China, Mexico, Canada, United Kingdom, Europe, so on and so forth? Okay. And what does that do for the strength of the dollar? What does that do for the market certainty? Does it provide clarity or does it continue to create this uncertain landscape where the markets are like, we don't want to really want to be in, we don't really want to be in a aggressive and risk assets because the landscape is uncertain. And so when large market participants are uncertain, where do they want to park their capital? In safe haven assets. Now, those safe haven assets, again, depending on the strength of the economy in the United States, it could be a safe haven asset like the United States dollar. But if the economy is not strong in the United States, they could favor gold. And if they don't favor gold and the United States dollar, they could favor another safe haven asset like the Swiss franc or like the Japanese yen. So we don't know what safe haven asset they could favor, but if the landscape continues to remain uncertain next week, they're most likely not going to favor risk assets. Okay. So just keep that in mind. Outside of tariff implications, we have, like I said, PMI figures, which are going to give us insights into the strength or weakness of the United States economy. We have multiple FOM speakers, so the question remains, do they lean more dovish? Do they support rate cuts in September? Or do they push back continuously on the idea of rate cuts? Do they mention that inflation still remains high, sticky, and troublesome? Do they talk about the labor market strength? Do they give a forward outlook as to what they think is going to happen? We'll be mindful of that next week as well. And then last but not least, unemployment claims, right? Does unemployment claims next week further support the case of today's NFP print that the labor market is cooling, which we know has been one of the primary factors keeping Jerome Powell on hold, right? Keeping the Fed on hold has been the strength in the labor market. Jerome Powell even said in his last meeting on Wednesday that the labor market remains solid. Well, today's NFP print contradicts that statement, which is why we're seeing dollar weakness. And so if next week we get an unemployment claim that comes out higher than what the previous reading was, which we can see here was at 218,000. So if this jobs report next week comes out at, let's say, 225,000, then that's going to be a 7,000 increase of people filing for unemployment claims, which is going to show some weakness in the labor market. And that's going to further support the idea or the notion that the Fed could possibly cut rates in September, which is something that Jerome Powell said they need to see. They need to see continued cooling in the labor market coupled with no significant increase in inflation, right? So that is what we're going to be mindful of next week. We have a few scheduled data releases. The data calendar is relatively light. Primary focus is going to be on Fed commentary, which we have multiple Fed speakers scattered throughout the entirety of the week. Outside of that, tariff implications will still be our headline focus. Okay. So as we roll over into the weekend, I'm going to continue to update you guys in the fundamental section on anything that does come out in terms of these headlines that I read usually during Asia session. I usually allow myself some time throughout the day for the markets to mature. And then when the markets roll over into Asia session, I digest any reports that have come out during New York and I drop them here for you guys and highlight little tiny things that I'm reading and paying attention to so that way you guys can keep up pace with what I'm reading. All right. Outside of that, let's just take a look at current prices. Total cryptocurrency market cap, you guys are already aware of our next area of interest. If buyers cannot defend at these levels and the market sentiment continues to remain risk off, uncertain conditions continue to linger in terms of tariff headlines over the weekend, then our next area of interest for dollar cost average levels, if we cannot see buyers aggressively defend and rekindle losses from this week, is going to be $2.6 trillion. If we do see some type of optimism stem back into the market and we can see buyers defend at these lower prices, I'm not expecting anything aggressive. We'd most likely just start to see a rekindling of this week's sell-off. The first area of interest in terms of the lower high that was recently created, we need to break back above and create support. would come in at about 3.85 trillion. However, right now that does not look like this is what's going to happen, as the market landscape I just showed you guys is still uncertain surrounding all the tariffs that are set to come into firm effect today and up until August 7th. All right. So until we see some solidification or some certainty around those tariff implications, I'm still expecting some sell pressure on risk assets for now, unless that landscape changes in the next 48 to 72 hours. All right. As for XRP, taking a look at some price levels. So our first area of interest for some dollar cost average levels has now been met, $2.94. As I mentioned to you guys, anytime we come into these buy deltas on blue chip assets like XRP and others, especially ones that we're going to be able to utilize in the DeFi ecosystem to earn yield moving forward, I am buying some XRP at these deltas, right? Not XRP that I'm planning on selling long term or holding long term. I'm specifically just dollar cost averaging into blue chips right now that I can use in the DeFi ecosystem. So if $2.94 is broken, that is then going to open up the door for $2.75 as our next area of interest. And that could look something like this. Buyers make an attempt to defend at these levels. Sellers push back and show their hand. Sentiment continues to sour. That is therefore then going to open the door for $2.75 as our next bearish target. If buyers cannot defend at current prices, we're most likely just going to see a dip down into $2.75 from where we currently stand. If at any point in time over the weekend the market sentiment worsens and we continue to see a risk-off induced environment, or any continued dollar strength or safe haven demand in gold, or any type of geopolitical induced event that creates over weekend demand for safe havens like gold, for example, a new announcement on the Middle East front where tensions escalate further, even maybe between Russia and Ukraine, we see headline news events that create a fear-induced environment, i.e., creating demand for safe havens. It's again most likely going to lead to continued sell pressure and risk assets. And under those conditions, that could open the door on XRP to revisit $2.42 as our next bearish target underneath of 275. All right. So taking this level by level, after 294, 275 is next. After 275, if the market continues to worsen, 242 is our next area of interest. And again, even zooming out on the higher time frame, albeit this is going to be painful short term, it would honestly just be a healthy correction of this excessively bullish move that we saw from July, where we could see buyers start to rekindle orders, markets start to accumulate, and we could see a recovery. And it would still just be a nice pullback, a healthy retracement from the July A to B move, right? So just keep that in mind. To the upside on XRP, if we can see buyers hold 294, and we can see the market mood improve, then to the upside, we do need to see prices break above $3.27. We need to see buyers become aggressive at these levels, and we need to see bullish momentum push above 327, breaking all this previous sell momentum and volume, retesting and holding 327 as support, while fundamentals support a risk on mood, and that could open the door for a revisitation of $3.59. We'll take this level by level. So to the upside, if we can hold above 294, 327 comes next. Above 327, that'll open the door for a revisitation of July highs at 359. You guys know that my overall bullish targets for the year of 2025 still remain. If we do see a risk-on environment at any point in time in the month of August, which again, we'll get to these levels level by level. I'm not expecting any of this over the weekend. So if you're watching this as a recording, it's obviously, of course, not going to come into fruition. I'm not saying this is going to happen overnight. But if we do see a bullish induced environment throughout the remainder of 2025, my highest targets on XRP still remain at $4.44 to $5.17 as the highest targets that I expect to come into fruition for 2025. Keeping in mind, we now only have 5 months left. Outside of that, that's my current breakdown. The current landscape, again, like I said, is uncertain, considering some of the things that we recently discussed and talked about at the beginning of the week have now materialized and unfolded. So I hope that painting this picture for you guys has kept you in the loop of what's going on in the market. We were probably one of the only communities on the face of the internet calling this market pullback at the local top, saying that we were noticing that momentum had stalled and that we should not overlook the possibility of a pullback heading into the first couple of weeks of August. Now we're here, right?